Okay, so as I was saying, please open to your charts. And then we are going to do the psychological levels for Bitcoin and then the trend lines for Bitcoin. So if you take Bitcoin, for example, the psychological levels that I discovered where it started from, let's say, and so if you've drawn the psychological level, let's say this one, option H, that should be 17,900, right? And then it moves to 18,900, or if we come into this place, let's do this 19,900, let's see, Control H. Let's do it 19,900. Oh, sorry. It started from 17,700. 17, it should be 17,700, I think. It wasn't 900. 700. 1 minute. 17,700. Right. And then it came to something like 18,700. Right. So let's move that to 19,700. Let's see. So with psychological levels, it's more like a judgment, and then you snap it as you go along. If it doesn't work, you move it to the next. So this one is more like 19,700. And then we move from there to the next level. So we are going to go to 21,700 from there. Option H.
Yeah, me betcha.
Could you guys mute, please? We come to 21,700. And then from 21,700, we'll go to 23,700. Right. 23,700. And then if you want to measure the distances between each of them, there's a tool. This tool, you find it here. You go all the way down. Where's that tool? Let me find it. Let me find the tool now. Right. Yeah, that is a tool. We call it price range. This tool called price range is under 1, 2, 3, 4, 5, 6. So when you go under here, you find the price range tool. If you start, it will come onto your panel here. So there's the price range tool here. So there, you can just measure to see the distance between each of them. So the distance is about 400 pips. You see, alternatively, once you've gotten this distances between the first and the second, you know that 17,700 to 19,700, it's 2,000, I believe. So 19,700 minus 17,700 is 2,000. So when you add 2,000 to this, you get the lines progressively. So we can continue from here. This plus 2,000 is 25,700. So we draw that 25,700. 700. So now that you've drawn these lines, I think we have enough lines that we can work with now, because the price action is here and we've gone all the way up here. So we have enough lines that we can work with. The second thing that we have to do is to just draw our trend lines. So to draw our trend lines, we know that we have to find either a high point like that, if it is trending down, and we can see clearly that it is trending down. So we can find a high point like that, and then we just take our trend line tool, and then we connect it. So from one point to the other, so we have 2 points. and then we connect it down. Alternatively, we can also take another trend line from that point and then connect it down this way. So we have like two trend lines on it like that. That is fine, right? So that's it for Bitcoin. So for Bitcoin, we have the trend lines on the 4-hour, right? On the 4-hour, we have created the psychological levels and we have created the trend lines. Okay, now let's review how the week went for Bitcoin. So let's say the last time we met probably was, fine, let me check the date. Last time we met was the 13th. Well, the 13th of June, which is Monday, the 13th of June. So let's see the potential price actions or the potential prices that Bitcoin has provided us with. You see, and when you see those potential prices, you would know whether the psychological levels needs to be adjusted or they can stay the same way they are. So for example, from the 13th, we have the 13th all the way the 13th of June. So this midnight, 12, 13th of June started, let's say started 1 o'clock started there. So option. So 13th of June started there. I'm going to zoom it in and we could see what possible opportunities we could have gotten on Bitcoin, right? So you can clearly see that our psychological level, right, was way up here. This was our price, the other psychological level, which means therefore that you can see that between here and here, there is something like a sub-psychological level, right? And this sub-psychological level, it looks like we had something like a tweezer top there. So imagine we have something like a sub-psychological level from here with a tweezer top, right? And that sub-psychological level, when we have this tweezer top, we could have gone in and traded this candle, right? We could have just gone in and traded this candle on the 4-hour. So that could have been a clear opportunity that Bitcoin would have given us because there seems to be a sub-psychological level, because if you look to the left, there are some levels there which we could have traded, you see, and that is sitting around the 22,700 zone, because we have 21,700, this 22,700. It's sitting around the 22,700 zone. We could have traded this, just this candle here, over here, this one. We could have traded that candle. Now this candle breaks down here, and then we're hovering in no man's land all the way. Now we came here, we had something like a Maribozo. We've not even learned that. There was no clear opportunities here anyway. We went here, we hit the psychological level, we hit that. It looks like it was going up, but you can see the wick wicked exactly on the psychological level. It came back down. We had something like a morning star, but the morning star ended above the psychological level. So possibly we could have traded this opportunity. You see, the funny thing with Bitcoin is Bitcoin doesn't seem to give a lot of opportunities. So personally, I don't trade Bitcoin. I use Bitcoin as a guide on the other coins, but I don't trade Bitcoin because Bitcoin doesn't move as much as the other coins do. You see, so let's use Bitcoin as a guide, but these are like potential opportunities for the whole week. One probably would have gotten, let's say, 1 or 2 opportunities on Bitcoin. So let's bench Bitcoin for now, but let's put the psychological levels as a matter of education. And then let's move on to the next coin that I wanted to talk about. And the next coin is ADA. ADA is a coin that I trade a lot, you know, so let me cancel everything on ADA and then I'll turn on the psychological levels for you. And then once I've turned on the psychological levels for you, we can talk about the opportunities that we had. So please, on your chat, if you don't have ADA, please get ADA up. How you would get ADA is simple. It is by, how you get ADA is simple. If you don't already have it in your list, go to the plus sign here as usual. and then come here and type in ADA USDT, and then you see it pop up and find it on Bybit, and then select it. And then once you select it, comes in your list, and then you pick it up. So for the levels on ADA, you can either jot this down and do it later. We are recording the screen, so you can either watch the video later, but then if you like, jot it down. These are the levels. I'm going to turn them on, and then I'll walk you through them. Okay. So the levels on ADA, the first levels that I have to technically 2 levels on it. I have 0.45, and then 0.5, 0.55, right? And then I have the sub-psychological levels, which are as follows. So between the 0.45, I have this other one, which is a 0.750, the green one. And then we go to the 0.5, 0.25, 0.55. And then we come down here, 0. And then we come down, and then we have 0.250. So you can jot this down, so you can look at watch the video later and create your psychological levels for ADA. Now let's go and look at the opportunities that ADA presented us from the 13th. So where is the 13th? 13th, 9 o'clock. Okay, 13th, 1. Okay, let's start from there. So option B. Right. All right. So there's the 13th. So if you look at it very, very carefully, let's turn off the B. When we turn off the B, you can see the psychological levels, the main psychological levels and opportunities that presented itself for us. So you can see clearly red candle, doji, green candle, meaning that it is a morning star. And then we had an opportunity here to go up. So it went up. So if we are using our 2% rule, excuse me, if we are using our 2% rule, let me expand it a little bit, then you can see. We're talking about this candle, right? We traded this candle. We went up from there. We had 3%, but then we only are looking for only 2%. So we got a first opportunity there. And then it came down. And then this one came up again. So these 2 candles, because their wicks were hitting the psychological level, this qualified as a tweezer bottom. So we traded this, right? Went into this one and traded that. So the psychological level is about 3%, but we're only looking for 2%. And we came out of that. Now this candle came down, and this candle went up. So we didn't even know what to do with that. But this candle came down. When this candle came down, it is the 2 of them form what we call the bearish engulfment. So we have to trade this candle down. Although this candle looks green, we traded it. We traded it all the way down. We got our 2% within that, and then we're out, right? Now we got this 2%, but the candle ended up as a green candle. So because it ended up as a green candle and we got a red candle, this is a sub-psychological level, and that is where the second psychological level that I have comes in, which is a green one. So you realize that this green line is a sub-psychological level. It broke the sub-psychological level. So this looks like a bearish engulfment. So we traded this one. We traded this red one. So when we traded this, how many percentage did we get? You see, we got 2% there very nicely. Now we have this one, which is like a bullish engulfment. It's a bullish engulfment on this one. Taking out the sub-psychological level, we were trading this candle. You see, but when we started trading this candle, the candle did not give us our 2%. It gave us 1.something%. So we stayed in the trade. The trade drew down, and then on the next candle, so which means that we did not get this 2% fulfilling on this candle. On the next candle, literally, we came back up again, And then we got about almost like 4% on that, but we only wanted 2%. So we got that. Now this candle went all the way up there. The next one almost hit the psychological level. We got this one, the two of them, if you look at the psychological level that we had, you could almost see that it went through it. So when it went through it, we will trade this one down because this now has formed what we call the tweezer top. So we trade this candle down. So to trade this candle down, we were looking for 2%. We got our 2% and we're out. And then the next candle broke the psychological level. But when it broke the psychological level, we're waiting for this came up, it wicked it. When it wicked it, it closed below this. So once it closed below this, there's nothing we could do. We have to wait. This candle formed, these two candles, we didn't even know what to call them. You know what I mean? So it was hanging like it's like two hammers. We didn't know anything. This candle came and it formed. But it formed down onto the psychological level. This other one formed up. The two of them formed what we call a tweezer bottom. Once it formed the tweezer bottom, we know there's an opportunity to go up. So we traded this candle. We traded this one. We got our 2%. We're out. This other candle formed that this looks like a tweezer. So we would have possibly traded this one, this candle down. We traded it. Did we get our 2%? Yes, we got the 2% on that one. So now the next candle, we don't know what to do with it. This next candle, it looks like if we were in it, we're not so close to the mid psychological level. So it was like a no trade for all these three candles, right? So then we came to that candle. It also felt like it was a no trade. I did not trade this candle because I wasn't sure. So I left it, you know. Now this candle came all the way down. We had this green candle. We wicked here. We had this red candle. And then I was only trading this candle from that to the psychological level. You know, it wouldn't have given me the 2%, but the candle went all the way through. And then we had another candle coming. We traded this one from there. We didn't get all the percentage that we wanted. So we just were standing out the game. This formed, and these three form what we call the morning star. And then we traded this to the top. So we traded that one to the top. We didn't get all the 1.something%. So we just closed the trade before the psychological level. We got a little bit of percentage and we're out of the trade. Now this candle formed, this other one formed. Because it broke in down, this too became a tweezer top. As it became a tweezer top, we traded this candle down here. When I traded, so I traded this candle this morning, this very morning, I traded this very candle. What I made on this candle, when I traded this candle, I made a loss on the candle. Why? Because I did not put in my trend line. There is a trend line that should have sat from here all the way there. Why? Because you see the trend was going up. Normally, it is clearer when you go into the one hour time frame. So when I didn't realize there's a trend line which was sitting here, I traded this thinking that it should come to the psychological level. It came here and it reverted back. So I literally came out of the trade like I'd break even. I didn't make a profit. I didn't make a loss. And came out of that. Now, the other thing is this candle wicked all the way up this afternoon. This one wicked all the way like this. Funny, I don't know how to call it, but I traded this. I traded it and I was scared. So I traded it a little bit and then came out of it. But then if I'd stayed in that trade, we would have gotten our 2%. Right. So you can see that when it comes to currencies like ADA, the opportunities are all around. It is just there. It is a matter of just knowing your candlestick patterns, knowing where the patterns are forming, and just trading them, and believing in yourself that this analysis that you've done is clearer enough to be able to just make money off it. And this is just candlestick patterns. We're not even using any form of indicators. There's an indicator that I'm going to get you to use. My friend modified it and we called it the armchair. I'm not sure if it's still there. The armchair, we call it. Armchair. If it is not there, I'll find it and then we would all use it. Chair. I can find it. I'll find it from him, and then we can use it as a form of confirmation when we see the candlestick pattern. You see, so this is just an analysis of what we have done so far for the week. You know, so just to let you know that once you get this thing, you get practice in it. It is doable. The other thing is you can still see these patterns as we've done it here, and then you can trade these ones in your testnet. So to trade these ones, how do you catch the trade? That's the thing. Because it is a 4-hour concept, what we do is these candlesticks, they close every 4 hours. So it starts and it closes at some point. For example, this red candlestick, it started at 9 o'clock this morning and it closed at 1. And then this one started at 1 and it closed at 5. This one started at 5 and it closed at 9 in the evening. And this one starts at 9, it closes at 1 a.m. 1 a.m. So the thing is, I personally trade between 5 a.m. and then 9 in the evening. It doesn't mean I'm sitting by the computer all the time. No. What I do is I have set alarms. I wake up normally 5 minutes to 5 and come and analyze the chart just before maybe a candle will close. For example, if this is the candle and it's about to close up there, I wake up 5 minutes to 5, waiting for the candle to close. But before I will look at the previous candles and ask myself, if this candle closes, what pattern is it forming with the previous candles? Based on the patterns it's forming, I can go into a trade right after it closes. So for example, this one, it is not forming any particular pattern with the others. So I'll just leave it. Now, before it gets to 9 o'clock in the morning, which is 8:55, I get another alarm to come and sit by the charts, waiting for this candle to close. So by the time this candle is closing, I was like, okay, if this candle closes there, it almost looks like a tweezer top kind of thing, but it's broken through the psychological level. So I'll go into a trade here and trade down. You know what I mean? And it gives you the travel. Like for example, this one gave us a travel down, but then it closed as a green candle. Unfortunately, it did. And look at this. This one also came as a red. If I'd gone into a trade and risked this and say I'm trading down, it also gave me the travel all the same on this one for the 2%. So although these candles ended as green candles, we got a 2% there. And if we had traded this as well, we definitely would have gotten a 2% on that one. Let me measure and see. Yes, we would have gotten our 2% on there. So therefore, by the time I come and sit at the chart, I'm just analyzing, saying, okay, which pattern is this going to form if it closes at 5 o'clock here? Based on the pattern, I'll know that I'll go into that distance, into the direction that I want. Let's say this then closes, right? I'll ask myself, this and that, what pattern has it formed? I don't know what pattern. This pattern doesn't fit any of our patterns, technically. So I'll just leave it. I won't go into a trade. Now, this two, what pattern? It looks like a bearish engulfment. And then if it's a bearish engulfment, closing my sub-psychological level, bearish engulfment, we expect to go down on that. We went down, I traded this, I made my 2%, I'm out. And then the next candle, it also came all the way down. This too formed something. So before this candle would close, I was there 5 minutes earlier, waiting for it to close, but it is 1 a.m. So I'm sorry, 1 a.m. I'm sleeping. So I didn't see this candle, all this opportunity. And then I woke up at 5 a.m. When I woke up at 5 a.m., by the time I woke up at 5 a.m., this candle, this 1 a.m. candle was closing. This too has formed a bearish engulfing. So I'll go into the trade here, 5 a.m., which by 9 o'clock, I've taken 2% out of this. And then I'll wait. This candle will finish forming fully. So on this candle, I was waiting. Before it closes, what candle has it formed with this and that? It looks like either a morning star or this one is a bullish engulfment. I'll go into this trade and see what I can get from there. There was not much to be gotten from there. But then this candle continued and I got my money from there. You see, so that is what you do. Every 4 hours, you put an alarm just before the 4 hour goes. In the UK, because the time is going to be 5 a.m. alarm. So 5 minutes to 5 in the morning, you set an alarm on your phone. So 5 to 5, an alarm. 5 to 9, another alarm. 5 to 1, another alarm. 5 to 5 in the evening, another alarm. And 5 to 9 in the evening, another alarm. Once you reviewed it, you can go into a trade. You go into a trade. And then you set your 2%. You set your stop losses. Then you leave it to do its thing. So when you're going into a trade, you go into in your buy bits. In this case, you're using the test net as a test. So you go into the buy bit, and then you set up your trades. Let's see if I've got. Okay. Let me go into my assets. Let me go into my derivatives. Derivatives, USDT perpetual, and then you go here. And then you go and do your trading. As simple as that. You select the coin that you want. In this case, we're looking at ADA. So when you come here, ADA USDT, you pick it up. If there's an opportunity that you've seen, maybe you put in by cost, you can type in, because we said everybody would have $1,000 there. You set it maybe 25% of your $1,000, but there's more on my anyway. 25% of your $1,000. You want to just take your leverage to 5, between 5 and 7%, 5 times or 7 times. Leverage means that the trading platform is lending you money, which means they are, if you say 7, they are multiplying what you put in here by 7 times. Do you understand? So then you can put 7 there, or 5, anything below 7 or up to 7 there. And then you go into the trade. You click isolated, and then we are going to the trader market. And then you say open short or open long. Open short means that you're trading the market down. For example, as I was saying here, that you go into the market, you short it down here. It means that you expect the price to go down. So it means that if I'm going into that price, I'll go in a market, and then I'll say that open short. Click on the open short. It tells me that confirm. I confirm it, and the trade comes here. See, when the trade comes here, then it means that I'll wait for the trade to go in the direction I wanted it to go. Do you understand? So for example, this trade will go into the direction I wanted it to go. So then I'll come and set my stop loss and then take profit. You go here, add take profit and stop loss. Take profit means that on this platform, for example, whilst I'm trading here, take profit therefore means that where do I want the trade to get to before I come out of the trade? I just wanted 2% on this one. So when I measure this from here to 2%, it's about, the price will tell me on the right is 0.4552. So then I'll go into here. When I go into my take profit and stop loss, I'll click on this take profit. It will be 0.4552. And then the stop loss, really speaking, because you've gone into the trade here, your stop loss should be just above these. Or you can go on top of the psychological level and type in 0. The price was 0. So you can click, you can right click like that and copy the price. And then you come and you paste it in. Sorry, like that. And then you confirm. Once you confirm, you realize that your take profit and your stop losses come here, that kind of thing. And then you end the trade. When you look at this thing very carefully, there's a dotted line. When the price gets all the way there, which is your 2%, it closes your trade, and then you make your profit. You realize that you made a profit by checking the balance here, that your profit has increased. I mean, your balance is increased, meaning that you made a profit on that. That's it, and then you accumulate it. But this is just the test net you're trading in. Because it's a test net, it's not real money. You understand? And because it's not real money, we are just practicing and making sure that this thing works. You see? And then after that, we are out of the trade, something like that. You know? So we are expecting to take profit all the way down here. When it gets, it takes the profit for us. But you will be in the 4 hour also in buy bit. So in the 4 hour, let me just turn it to the 4 hour. See how the 4 hour looks. So the 4 hour will come all the way, hit the profit here, and then we are out of the trade. That's it. The stop loss there, you take profit there, your entry there, it hits it, buy, it closes the trade for you, and then you're good. Okay, so that is it for today. What we're going to do tomorrow is we'll review a few trades. We might probably do a psychological level for this one. Tether. Your tether travels a lot. Like, for example, look at this. This is a cool opportunity. This closed at 5 o'clock. 5 o'clock, I was not looking at the charts. If I was looking at the charts at 5 o'clock, I would have traded this, made my 2%, and I'm out. But I wasn't looking at the charts at 5. You see, so there are so many opportunities that we can take on these trades, and so I just would like you to just review what we've done today, especially the psychological levels on ADA, and then go back and test it. I have 2 psychological levels when it comes to ADA. The main ones are the 0.45, 0.5, 0.55, and then 6, 0.6. So it is a difference. You can see the difference is 0.05, 0.05. You add it on, you add it on, you add it on. And then I have psychological level. I've also put that in a different folder, which is the PSL2 I've got here. So when I open that, that is lines between the main psychological levels. So that one, I normally, if I'm on the 4 hour, I don't normally use that. When I'm on the other strategies, then I use those ones. You see, so keep this one on your charts, put it in a folder nicely, put a trend line where it has to go, and then we will look at stuff tomorrow. Now I'm just going to open the floor for questions, if that's okay. I'm going to stop the recording.